Hi everyone and welcome to another episode of Rise High TV. Today I am joined by one of our wonderful brokers, Corey Sermon. Thanks for joining us, Corey.
No worries.
And we're going to be talking about how to get into property investment. So this is obviously a question, we obviously get a lot of questions about getting into property investment because property investment, as we know, it's a great way to build wealth, and a lot of people really like the fact that property presents a lot of good qualities as an investment vehicle. So we're going to be talking all things getting started in property investment tonight. We have received quite a few questions from clients and from other people that have sent some messages in throughout the last couple of weeks. So we will be addressing all those questions in today's segment, but we will also be happy to take questions as we go. So if there anything that pops to your mind, any questions or comments that you have as we're speaking, please feel free to leave a comment below and we will do our best to answer it throughout the segment. Or you can email Amanda at risehigh.com.au and she will pass the question on to us. So just before I get started, a couple of housekeeping things. Many of you would know that we do run face-to-face workshops for property investment, and we do have our next one coming up on the 1st of August, which is next Thursday. And at that seminar, which is going to be held in Prospect, goes for about an hour, it'll be a great opportunity to learn more about different types of properties that you can purchase to add to your portfolio. What we'll be doing at that seminar is we'll be going through, the different options of apartments, townhouses, old versus new, what type of property should you be looking for, what are the pros and cons of each property type, and how it might relate to your specific circumstances or your specific objectives with your property portfolio. So definitely, if you're interested in learning more about property investment, I would really encourage you to try and put that in your diary. Get onto our website, risehigh.com.au, under the property seminar section and register for that. We've only got limited spots available for that seminar now next Thursday. So definitely come along to that. Yep. Also, this week presents an exciting week for us because on Thursday, we're actually heading over to Melbourne. The Rise High team is up for the Australian National Mortgage and Finance Association Awards, where we're up for multiple awards, including Best Mortgage Broking Business, Best Customer Service, and a whole range of other things. So shout out to all of our clients who've made that possible. Tune in on Thursday and Thursday evening and we'll keep you updated on how we go at the National Mortgage and Finance Association Awards. So, enough of the housekeeping. Let's get on with the exciting content that we have for you today. Yep. So, Corey, I'm really glad that you could join us because you've been investing in property for a while now. So you're a great person to be able to share some insight.
Yep.
What are some of the reasons why you chose to invest in property?
I just saw it as a good vehicle to build wealth. I think probably the main one.
Yeah. And what would you say is your favourite thing about property investment as an investment vehicle?
Well, I just think it's more consistent and steady as opposed to shares, I would say. It's probably the main thing.
Yeah. I mean, they're definitely some of the reasons why I like property as well. And I think, the consistency and the stability is definitely a positive. And it does, the predictability as well. When you look at it over the long term, it's it makes it quite a good investment vehicle.
Yeah, and particularly in Adelaide, very steady, I think.
Yeah. Excellent. Okay, so we've got a few questions.
Yep,
I'm going to go through them. And as I said, please feel free to ask as we go. Shout out before we start to Richard, Rue, Sarah and Chanel. Thanks for joining us, guys. Really appreciate you tuning in. Okay, first question today was from Michael.
Yep.
So Michael asked, if you want to buy your first investment property, what are the steps? How do you achieve this goal? So that's obviously a pretty broad question. So why don't we just start with, what are the first things that someone should do if they are interested in buying an investment property?
I think first of all, you want to understand your borrowing capacity and also have a bit of a think about what both your short and long-term financial goals are.
Yeah, I think they're great starting points because I think, working out your goals and understanding why you're buying an investment property, it's a great step to consider buying an investment property, but you really need to know what you're buying it for.
Yeah, yep, exactly.
And I think it's really important when it comes to your goals to not only reflect on what your investment goals are, but also what your personal life goals are.
Yes.
Like,
Yeah, because one tends to impact the other, I think.
Exactly. So whether you're going to, upgrade your family home or buy a new car or go on a holiday or private schooling, those things can come into play.
Yes, definitely. Yeah, and you want to have sort of a bit of a perfect balance, I think.
Yeah.
To suit your needs.
Yeah. So goal setting. So making sure that you understand what you're hoping to achieve over the sort of short, medium, and long term.
Yes. Yep,
let's talk about borrowing capacity. So what are the steps that someone would take to work out what their borrowing capacity is?
Okay, you would generally meet with a mortgage broker, for instance.
Preferably a Rise High mortgage broker.
Preferably. And just assess your income, your assets, liabilities. And just basically see what your statement of position is. And that gives you your borrowing capacity.
Yeah, and now that we've had since the Royal Commission, there's been quite a lot of changes in the lending space, and we're now finding that APRA's loosened up on the assessment rates, which means that in plain English, what that means is that different banks now will assess you differently in terms of your borrowing capacity. So it's more important than ever that people go to a mortgage broker rather than a bank. Yes,
there's been a lot of changes, and I think a lot in the positive, particularly in the last couple of weeks.
Absolutely. So It might be that if you had this goal of buying your first investment property over the last 12 months and it hasn't been a possibility due to your borrowing capacity, it might be that now it is a possibility.
Yeah, definitely. Very good chance.
It's definitely worth investigating that again.
Yeah.
Okay, so I think they're two really good first steps, because I think once you know what your goals are and you're trying to achieve, and then you know what your borrowing capacity and what you are capable of within your means, then you're really ready to buy a property, aren't you?
Yeah, it gives you a very, very good starting point.
Yeah, and I think when you define your goals and when you define your borrowing capacity, it also helps to narrow down your strategy as to which type of property will best suit your portfolio for the stage of life that you're in.
Yes. Yep.
And that will be another topic that we'll continue to discuss at the seminar next Thursday. So once again, register for that. So hopefully, Michael, that helps you just to get started and get your foot in the door. So next question is from Troy. Troy asks, should you buy a home to live in first or an investment property first? I mean, this is a question that we get asked often, isn't it?
Yeah, look, I think that is a personal choice.
Yeah.
There are advantages of an investment property, from the tax perspective, because all costs associated can help reduce your taxable income. So that's one good thing about investment versus your own home. However, on a personal level, I think there is nothing quite like buying and living in your first home, but I think that really is a personal one.
And I think from my perspective, I've seen people succeed, really well with their property investing goals, having started either way. There really is no right or wrong way to get into it. And everyone's experience is different. I think it also depends what stage of life you're at when you start buying property. I was quite young when I started. I was 18. So for me, I had the benefit of still being able to live at home with family, which meant that I could start building my investment portfolio before I bought my own occupied home. And that suited me for my stage of life.
Yep.
But there's equal merit in starting with your first home, especially if you can access some, grants or some special bonuses.
Yeah.
And then using that first home as a stepping stone to then convert into an investment property down the track and upgrade.
Yeah, I think it's really a personalised choice, that one, really, where you're sort of at in life and your own personal situation.
Yeah. And I think, I'm sure that, you often get clients that come to you and that they're not quite sure which way they should go.
Yep.
But then, do you find that after they've had the discussion with you and you talk to them about their goals and objectives and their borrowing capacity, that the path becomes a bit clearer?
Yeah, definitely. Yep.
Yeah,
definitely.
So if that's something that you're struggling with, it is possible that a one-on-one chat, talking through your goals and talking through your borrowing capacity will actually help you to determine which of those strategies is best for you,
yes.
Whether it's best for you to buy an investment property first or a home to live in first. So would you say come and have a chat?
Yeah, definitely. Come and have a chat and we can certainly put a plan in place.
Yeah, excellent. Okay, so hopefully that helps, Troy. Let's go to Kate's question. Before we do, shout out to Francesca, and Twee and Sharon and Susan. Thank you for tuning in. We appreciate it. So I was up to Kate's question. So Kate wanted to know how she can educate herself to learn how to invest in property properly,
Okay,
which is it's great that Kate's wanting to like educate herself.
Yeah.
So yeah.
There are many books, websites, blogs, lots of educational things where you can upskill yourself and educate yourself in property investing. We also run a number of seminars that Marissa's mentioned through the year that are free of charge, that you can come and learn some more yourself. But basically, when I sort of started out, I read and educated myself on everything I possibly could. And then literally just took different bits and pieces from each thing that was relevant to my situation. Because as we mentioned, not what suits you might not suit the next person. But just educate yourself as much as you can. That's the best bit of advice I can give you.
Yeah, and I think it's education is really, really important. And that's why we run, free educational things like these lives and our seminars. But I also think, Kate, don't underestimate the value that you get from working with experienced partners like your mortgage broker who actually has achieved what you want to achieve.
Yeah.
You know, so I mean, I'm sure that you would say, Corey, that given that you're a successful property investor in your own right, when you do meet another client who is wanting to achieve what you've achieved, you're able to add a lot more value than the traditional mortgage broking service.
Yeah, and also just give them the confidence, which I think is a pretty key thing when you're looking to make what is a big step for somebody.
Yeah, so I would add to the education piece and say, yeah, it's great to educate yourself, but you also want to make sure you're surrounding yourself with a team of people, your mortgage broker, your accountant. You want to make sure that those people in your pocket are actually experienced property investors or have had the experience to help their clients achieve what you are trying to achieve with your property investment goals, because only then can you be sure that they can actually give you, the advice and the support and the guidance that you need throughout your property investment journey to avoid costly mistakes.
Yep.
Yeah,
Definitely.
so hopefully that helps, Kate. If you want any more clarity on that, please get in touch. Next question was from Luke. So Luke asked, what are the most important things to get right when buying your first investment property?
Okay, I think location is a big one. Look for a property that is perhaps close to schools, services, public transport.
Yep.
Future infrastructure, I think, is a big one.
Absolutely.
Yeah.
I think infrastructure is a really big one. So definitely, buying in the right location, buying the right property. I think at the same time, I'm going to play devil's advocate and just throw something in there with that.
Yeah, that's fine.
I think that it's really important not to use that as an excuse to procrastinate your buying.
Yes.
I do sometimes, see people that want to get into investment property and they've got their pre-approval and they've done all their research, they've done all their education, and then they spend 10 years trying to find the right property in the right area. So I think it's a matter of the fact that there are lots of right areas, as long as it's got the good characteristics of a good quality investment property, which is something that we'll go through next week at the seminar.
Yep.
But as long as it ticks all the boxes and it fits within your borrowing capacity and most importantly, fits within your cash flow means.
Yes, definitely.
And you can afford to hold it for long enough to realise the gains, then, that's the most important thing, isn't it?
Yeah. Yep. Also, I personally like something with a little bit of land content. So as opposed to perhaps an apartment.
Yeah.
That is a personal thing, because land appreciates and is becoming more and more scarce.
Yeah.
So that's a personal thing.
Yeah.
That I sort of try to look for.
Yep. So just getting back to Luke's question, what are the most important things to get right when buying your first property? I think it's about buying the right property for you.
Yes.
Would you say that summarises it? So that might be, and that really depends on your personal situation and your the position that you are in life and the stage that you're in and what you're trying to achieve. So it is quite personal to your specific circumstances, but it would consider things like, is it land? Is it an apartment? Is it you know, an old property that you can add value to, or is it a brand new property that's going to give you tax benefits? So it's really about choosing the right property in the right location for your particular circumstances and goals. And if you want more, I mean, we're going to be speaking about that whole topic for an hour next Thursday, so come along. Let's move on to Joan. Oh, just before we do, we've got some shout outs. Hi, James. Thanks for joining us. And yeah, we'll keep moving on. So let's talk about Joan's question. Joan wanted to know, how do you mitigate the risks when owning an investment property?
Okay, I would say make sure you get yourself a licensed property manager.
Yes, that's so important.
Yes.
Oh, yes.
Yeah, they may, you know, their charge may be possibly 10% of your rent, but I think they more than cover that in getting you good quality tenants, but also handling your maintenance and the day-to-day running of the property, removing quite a bit of the stress and worry.
And I think not only does that help to mitigate the risks, but it also takes so much of the pressure and stress away.
Yeah.
I like to consider myself a bit of a lazy investor. And having a good property manager enables you to be a lazy investor, because you can just let them do the work and you can just collect the rent.
Yeah.
And it's also important, you know, if you do have a problem with tenants, which inevitably, if you're an investor at some point in time, you will encounter a problem with tenants.
Yep.
A good property manager will make sure they're following the correct process to ensure that you can get your, you know, to ensure that if it does go to tribunal, they've got it all sorted and you're gonna be fine. Or if you do need to lodge an insurance claim, that everything has been done properly.
Yes, insurance is very important. That was going to be my
that's the second one.
Yeah. Make sure you've got what is a landlord's package that covers both rent default and also any damage by the tenant. Very important. I have many moons ago had to use this myself, and it was worth every cent I paid for it.
Absolutely.
Definitely.
I agree. I think the two biggest things you can do to protect yourself is property manager and landlord's insurance.
Yep.
You also still do need building and contents insurance over your investment property. That's important to point out as well.
Yeah, definitely.
So that, I mean, there are obviously risks involved in any investment. Property investment's no exception. But I think if you've got those two things down pat, then most of the risks of property investment are mitigated.
Yeah, and I think as well, if you do encounter an issue along the way, don't let that get in the way of your long-term goal.
Absolutely.
You have to remove the emotion from it a little bit. And yeah, don't let it sort of deflate you. Just take it in your stride, work your way through it with your property manager, but don't let that deter you from your long-term goal.
That's really good advice.
Yeah,
awesome. Okay, we are up to Owen's question. This is a good one. Is it best to have an interest-only or principal and interest loan for your first investment property purchase?
Okay, that's a good question. Look, I think it's a personal choice and situation-based, yet again.
Yeah.
Interest only will increase your cash flow, definitely, week to week, because you're not paying anything off of the principal. So a little bit more money in your pocket. However, the two compared to each other from a tax perspective, there's not a huge difference, because you can only tax deduct the interest repayment. With principal and interest, however, you are reducing the debt down. So you're paying off some of your loans. So there really is pros and cons to both, I think.
Yeah, and I think once again, I think it really depends on what stage of life you're in and what are your priorities, not only for investment property, but also for your personal situation. You know, it may make sense to keep your investment loans as interest only if you have the objective of paying down, you know, owner-occupied debt first, or other debts that you have first that are not tax deductible.
Yep.
On the other hand, if you don't have any, you know, owner-occupied debt, then you might be better off putting principal and interest, because you can attract a cheaper interest rate.
Yeah.
And potentially save a bit of interest.
And you do have gives you a little bit more borrowing capacity as well in the current market, principal and interest.
Yeah, and I guess, you know, paying principal and interest, you do build up your equity faster as well, because obviously you're paying down the principal of the loan.
But
so
very case by case, and
pros and cons of both.
Yeah.
So really dependent on your individual situation.
Yep, definitely.
Okay, cool. Shout out to Malenko Tom Sasha. Thanks for joining us, guys. Hope you're enjoying the session. Please feel free to ask any questions. We've still got probably about 5 to 10 minutes to go. So put your questions or comments below, and yeah, we'd love to answer them as well. Kelly wrote in, and she wanted to know whether she should buy an established house or a brand new house for her first investment property.
Okay, well, I'll run over the pros and cons of both. If you're to buy a new property, you do have depreciation, quite a bit more depreciation expenses because it's new. You may probably
maybe better tax refunds.
Yeah, yep. I would imagine if you were comparing the two within the same area, you may attract a little bit more rent as well, and probably not too much in the way of maintenance over the first few years.
Yep.
So that's probably one of the strong points. However, I think that you'll probably find that you may have a little bit less in the way of land content.
Yep.
If you were comparing the same amount of outlay for the property. If you go for an established property, there generally would be more in the way of maintenance. However, these maintenance costs are tax deductible, so the gap does get a little bit narrower.
So getting back to the land content, I think that's a really interesting point. I just want to flesh that out. So we're basically saying that for the same amount of money, let's say you've got $350,000 to spend, and you know what suburb you're going to spend that in. If you're going to go for something brand new versus something established, you're going to get less land for the brand new, and more land for the established.
Yeah,
and why is that significant? I just want you to talk that through and explain that to Kelly.
Because land appreciates over time, goes up in value, whereas the building depreciates.
So would you expect then that the established property would do better from a capital growth perspective long term or maybe appreciate faster than the brand new property?
I would think so.
Yeah.
I would think so.
I would agree. I would agree. So, there are definitely pros and cons. There's a lot of advantages of a brand new property, but there's a lot of advantages of an established property as well.
Yeah.
So, that also is something that we'll flesh out in quite a bit of detail next Thursday at the seminar. So, hopefully, Kelly, if you want some more detail on that, you might come along to that one. So that brings me to the end of my questions. Hopefully that has given you a little bit of insight into some important factors to think about when you're buying your first investment property. But remember, the team at Rise High definitely are happy to help you. And property investment is a very individualised thing. There really is no one size fits all that suits everybody. You really do need to make sure that you find the right property and the right strategy for your circumstances and your goals. So we can definitely do the sit down one-on-one and talk through that. So like I said throughout the session today, we do have a property investment seminar next Thursday. You can register at risehigh.com.au. And also, if you're available this Thursday, make sure you tune in to our Facebook and social media and keep track of how we go at the National Mortgage and Finance Association Awards in Melbourne at the Crown Casino. We'll be looking forward to getting frocked up for that, and we'll be keeping you posted as we go. Thanks for joining me, Corey.
No worries, you're
provided
welcome.
Lots of great advice tonight, and thanks for tuning in, guys.
Thank
we'll
you.
look forward to speaking to you next month. Bye.
Bye.